All right, we are live, October 2021, Washington WREIA. Welcome everyone. I'm going to give a few minutes for people to try to click in. Feel free to say hello if you'd like. Also, as many of you know, good evening, Alan. Feel free to throw out a question. Hey, Dwayne. Throw out a question anytime you like. It'll come up on the on my chat box, and I will do my best to answer those questions as they come in, or I certainly take time at the end of the show to answer those. Kanye, how can I get in touch with you? Kanye, you ready? I'm going to throw it out to you. 301-943-5535. Send me a text, and I'll be happy to get back in touch with you. See, sometimes I have to make people join the Washington WREIA meeting in order to get my phone number. Charlie, good to see your name on the screen, I guess, the best thing I can say. We got some good stuff for you tonight. Let everybody kind of come on in. I apologize. I certainly need a haircut here. I just ran in. I don't know where you guys are. I know everyone's all over the DC area, but man, it opened up here in Rockville. We had a ton of rain. So I kind of ran from the car. So again, hope everyone is doing well. As you come in and check in, feel free to say hello. Feel free to answer, throw out any questions that we might have. Hey, Dominic, good to see you. Miss Robinson, hello, everyone. Good to see you too. All right. All right. So hopefully everyone's enjoying this beautiful weather. Again, I'm just stalling a little bit to let everyone come on that's here. Advertising free zone. I like that. Feel free to network and say hi. We put that up because there's a few people that always try to kind of interlope into the meetings and throw out their company name or their company website or logo. And not a big deal, but if we just get, 30, 40 people online just kind of trying to pimp their own products and services, kind of takes away from what we're doing. Privately too, if you ever want to, text me or email me, we are talking about starting to kind of get back together in person, maybe mix and match a little bit, do a little hybrid next year where we get together a few times. And we also do a few more online meetings. So if you have any thoughts on that, how you're feeling about getting together, drop me a text or drop me an email and we'll kind of tally those up because we're planning some good things for next year. All right. So as we get started, I'm going to get going here. This month, we're going back to the basics. Many of you know, as I try to come up with different subjects and different speakers, different ideas. Last month, we did something maybe a little bit higher level called a 1031 tax-free exchange. We had Robert Levinson come and join us and share with us different strategies and techniques to kind of sell some investment properties and tax defer your gains into other properties. So a little bit higher level stuff. But I thought, you know what? Been talking to a lot of different people over the last month, 6 weeks. And sometimes it's good to get, back to the basics, just kind of refresh of what we're doing. Hey, Miss Godfrey, good to see you. Michelle, good to see you. First time. Where will the meetup be held? Michelle, we meet in Bethesda, the Women's Club of Bethesda. When we do get back together, we have not met there now. We've not been in person now for what has it been, guys? 16 months or so. But we're starting to talk about that and think about that for next year. But as I was saying, sometimes it's good to get back to the basics. And I wanted to throw a little bit of a slider here on this meeting. I want to share with you kind of what myself and other people, other investors that I've been talking to are kind of focusing in on, and kind of where two things. This is kind of our agenda for tonight. Number one, kind of the two best sources of deals right now, where a lot of investors are finding their properties. Now, again, I don't care what your strategy is. I don't care if you want to buy, renovate, and sell. I don't care if you want to wholesale real estate. I don't care if you're looking for maybe a good rental property. This is kind of the areas where a lot of investors are focusing in on. So I'm going to talk about the two best sources that I've seen probably in the last 20 to 25 deals that I've done. They all have something in common that I want to share with you tonight. I'm also going to talk to you about the two best financing sources. Now, again, there are a lot of different ways to finance real estate. We all know that. But I really want to focus in on two that have kind of come to light, or if you will, kind of bubbled to the top. where if you can kind of figure out, you'll have plenty of capital in order to do your deals. Again, I'm not specifically talking about anyone's strategy tonight per se. This is going to be kind of an overall viewpoint, if you will, kind of a worldview on real estate, depending on what you want to accomplish. And we'll talk about that a little bit more. I'm going to also give you a very simple property analysis. I'm going to show you, again, does not matter your strategy, but just something you can do on the back of a napkin just to get comfortable with some of that. So you feel good about going into a deal and going into a property and knowing that you're buying that right, knowing that you can get a profit or cash flow on the back end. We're going to talk about that. And then I'm going to end the meeting with exit strategies. And when I say exit strategies, what I'm talking about here is we want to match our exit strategy with what the market is telling us to do. So I'm going to talk about a few things that we've been doing, myself and others, to kind of maximize those exit strategies. Again, this doesn't have to be on every single deal, but this is working now in the current market we're in. And I believe next year, as we go into next year, it's also going to work. So that is what we're going to do. We're going to spend time in those 4 areas tonight. At the end of this seminar, at the end of this meeting, online chat, whatever you want to call our Washington REIA October 4th meeting, I'm going to invite people. I'm going to take up to 4 people that want to take what we're going to be talking about tonight and going into much more depth. Okay. We only have a certain amount of time on these online meetings, but I'm going to take 4 people. All right. And we're going to do a 1-day, all-intensive day seminar here at my office here in 7 Locks Road in Rockville, Maryland. It's going to be from 9 to 4. It's going to be on Saturday, November 13th. So as you're listening to this and you're thinking about this, if you want to participate in this, we'll show you how you can sign up for this. It's going to be 4 people. Okay. So that's what we're going to do tonight. So let's kind of get started. Everyone's kind of gotten online here. So we'll get going. All right. 2 best sources of deals. Let's sit back and talk about this for a minute. Let me get my notes. My phone's ringing. I've been doing all sorts of things today. All right. So all of you know, there are many, many different ways to find houses, right? Different strategies. I personally started out with buying pre-foreclosures, right? Before someone would go into foreclosure and the bank would do an auction, I would buy that house before that auction date. I would knock on doors, I would mail letters, I would do phone calls, and I bought a lot of pre-foreclosures. Then I morphed into buying a lot of houses at auctions because it was natural from pre-foreclosure go to the auction, okay? And then I morphed into, when I went to the auction and it didn't sell, I started working with banks, local, regional banks all around the area. Now, for those of you that don't know me, or this is your first or second or third meeting, I've been doing this now for a long time, 25 plus years now. Okay, I started in the early to mid 90s. Okay, so I've been doing this a long time. I've seen a lot of different markets. So I did that for a while. Like I bought bank REOs, I bought houses at auctions, I bought pre-foreclosures. I bought houses that were vacant. I bought houses from landlords. We did direct mail. I bought a lot of houses through estates and different methods. So there's always a lot of different ways to find houses. I bought houses from realtors. Okay. But what's happened lately? And I've been all through up and down markets. And those of you listening that have experienced, Charlie and some of you guys, if Ron's on the line tonight, and some of you folks, you've experienced, Gary, you've experienced the same things I've had over the last 20 plus years in this area. There's been times when the real estate market's been very, very good. And there's times when the real estate market has been very, very soft. Excuse me. All right. And we kind of adapt our strategies based on that real estate market. It's very important to do that, because if you're right now only wed to buying pre-foreclosures, what would have happened to you in the last few years? Well, last 10 years. You wouldn't be buying any houses because Maryland made it very restrictive to start knocking on doors and buying pre-foreclosures. If your whole strategy was about buying houses at auction, and I know investors, that's all they do. They just bought houses at auction. You would have been shut out in the last 18 to 24 months. Why? Because of the pandemic. There has been very, very few auctions. Now, those are going to click back up. You might want to get your auction hat back on, learn the strategy techniques, and get back to auctions. If you, so again, things change. Now, what's happened with the banks, right? We bought a lot of short sales there for a while, but what's happened with the banks? Well, a lot of the banks have been, and this has been going on for 10 to 15 years, but a lot of the smaller regional banks have been gobbled up by the big boys. The Bank of Americas today are so much larger. The Wells Fargos, the SunTrust, all these banks are so much larger than they've ever been. And they've gobbled up a lot of these mid-tier and smaller regional banks. Hence, it's much harder now to be buying bank REOs because you got to get through all the weeds. You got to get through all the bureaucracy. You got to get somebody at Bank of America to actually make a decision. So again, some of these strategies kind of come and go, if you will. And so that's why I'm saying right now, as you look at the market, in my opinion, there's two best ways to find these houses. Let me share those with you. Now, in one of my emails, and I know all of you guys read all the emails because, boy, we put a lot of time and effort in those. And I know all of you read every word of the emails. And in one of the emails, I mentioned that where is the time or where is a place that you just sit back and you think, okay? And you think. For me, and I said in the email, sometimes people think in the shower. Sometimes people think about taking a walk or working out, maybe on the treadmill or outside running, or maybe on a bike ride, or maybe who knows. But you always need a little bit of time, a little bit of effort sometimes just to think. And where I do my best thinking by far is when I'm driving. Now, many of you know, I drive a lot. I mean, I'm all over. I don't have really an area that I only buy. I buy in DC, Maryland, and Virginia. And so I'm in my car quite a bit. And I do a lot of thinking in my car, sometimes the music, sometimes just silent. I also take time early in the morning. I'm kind of an early riser. And I take usually about 15 minutes in the morning where everything is shut off and I just think, okay? And in one of these thinking sessions, if you will, I realized that, you know what, John? All the houses that you're buying, and again, I'm buying from different sources. I'm buying sometimes from wholesalers, sometimes at auctions, sometimes at vacant houses, sometimes from estates, sometimes all these different houses that I've been buying, they've had one thing in common over the last, 20, 25 deals, about a year and a half. I do about 25, 30 deals or so, maybe a few more this year, a year. And so what I started thinking about, what's the common denominator, right? What is something I can repeat? What is something I can really put my arms around to really focus on and market to? And what I came up with, it was staring me right in the face. And as I talked to other investors, I realized this was happening in their businesses too, is that most of the houses I was buying had the element of old age. It had an element of old age in it. I would buy houses. I can't tell you how many hospital beds I've moved out of master bedrooms in the last year and a half to 2 years. Now, folks, I've always bought houses from older people. But the trend that I've seen is that a lot of deals that I'm buying right now are from older people. Now, older people that have downsized, older people that have had to make a transition from their personal home to a retirement community, maybe assisted living, maybe a nursing home. And so I started seeing this trend and I said, John, why are you fighting this? Now, again, in my own personal life, some of you know, I'm going through this with my own parents. My parents are older. They wanted to live in their family home. And it's gotten to our point where we need to make different arrangements for both of my parents. It's very difficult for them to live in that family home. So I'm going through in my own personal life. So maybe I'm just, the rule of magnetism or the idea of magnetism, you're kind of going to the areas that you're kind of going through in your own life. But I've really noticed this and I've done something about it. Okay. I'll get to that in a minute. The second thing I noticed, okay, now I'm buying a lot of houses from older people. I've also always bought throughout my career, always had a steady flow of houses from estates. Now, again, if you're tuning in and you know nothing about this, estates obviously are where someone passes away. All right. They file an estate with the county or jurisdiction that they died in, Washington, D.C., and Maryland, Virginia. And there's a process that goes through. But what's consistent all across the country is that when someone passes away and they have a piece of real estate or they have assets that need to be passed on to heirs, there's an estate open and a personal representative is identified. That is who you want to be in contact with. That person is the person that you want to be buddies with, if you will. This is where you want to market to. You want to do letters and phone calls and visits, and you want to surround yourself into that personal representative states, because if they have the ultimate decision power, now again, they'll confer with heirs and so forth, but they will make that decision. So these two areas are screaming at me. So why am I fighting it? Well, I'm not fighting it. All my marketing has shifted. Okay, has shifted toward focusing in on older homeowners, people that may be transitioning into a different part of their lives. And they have a home, or a piece of real estate or a building or a commercial property or a note or any asset that they might have that they're ready now, or an older landlord. Okay, so it's not just a specific, just an older person living in a house. There's different categories of these people. And at my seminar that I'm going to give November 13th, Saturday from 9 to 4, I'm taking 4 people. I'm going to show you each of these categories and how you specifically market to these people. Now it's much broader. You want to start marketing to everyone in that quote unquote older senior community, nursing homes, assisted living homes, different directors of different programs, different publications that are focused on seniors. This is where you want to spend your marketing dollars in my mind, because areas to market are shrinking. We're not doing short sales right now. Could be in the future. We'll transition to that when we need to. We're not doing bank REOs. I haven't bought a bank REO in many, many years, where that used to be a staple of my business. I bought 10, 15 houses a year from banks, directly from banks, or directly with an REO agent representing a bank. I haven't bought an REO in years. I haven't bought a pre-foreclosure in years. I bought auction houses, but again, in the last 18 to 24 months, I have not bought one. Okay. So my focus right now is in this segment, this demographic, and all my marketing is right at that demographic. So the 2 best ways right now in this market going forward for a while is going to be the senior community and estates. All right. Now that little tidbit right there, that little nugget is worth every penny that you paid to come onto this online meeting. Now, again, I can't see you in person. I know a lot of you are probably laughing right now, but I can't see that. But it's true. This is invaluable information. And if you're in the real estate investment game, again, I don't care what your strategy is. I don't care if you're looking for rentals. I don't care if you're looking for notes. I don't care if you're looking for wholesale deals. I don't care if you're looking to buy, renovate, and sell. I don't care if you're looking for commercial properties, multi-unit buildings. Whatever you're looking for, focus on the senior market. Okay, with good targeted marketing. Number 2, the second thing that I've seen in the last while, and I've been a big advocate of both these sources, but let's shift over into financing, because folks, there are ways to do real estate with no money down. Some of you are interested in wholesaling. Great strategy. Some of you are interested in owner financing with very little money down. Great strategy. But the 2 best ways to finance real estate been in my career. One, I haven't really used much, I'll be honest, but it's a good source. The other one has been the focal point of all my capital. Number 1, it's learning and creating private capital. You need to learn how to raise private capital from individuals that have money that don't need that to pay the bills. And right now with the pandemic and with the overvaluation of the stock market, some people believe, and some people believe overvaluation of the real estate market. But right now is a tremendous time to raise private capital. And the simple exercise that I'm going to give you, I think they're on here tonight. I'm working with a couple of folks in a little mentoring program, very, 3 hours, $500 type thing, but working with them on talking to them about the private bank. This simple exercise. I want you to identify this week, tomorrow, Wednesday, Thursday, whenever you have a little bit of time, 5 people in your network, people that know you by the first name. So when you call them up and say, hey, Jim, this is John. Jim knows John. He doesn't say John who. He doesn't say John from where. He doesn't say who's calling. He says, hey, John, how you doing? How's Brenda? How are the kids? How are things going at work? I want you to identify 5 of those people that you believe have $50,000 or more in their bank account willing to invest. Now, if you don't know anybody with $50,000, that's okay. Number 1, we joke about you need to find new friends, but more importantly, if you don't, just phrase it this way. Do you know anybody that might have $50,000 in order to invest in real estate? Folks, I want you to go through this process. It's the law of knowing 7. In other words, if you know 7 people in this world, chances are you know the world. Think of the power of that. So if you just know 7 people that you can call, I'm reducing it down to 5. We don't need to know the whole world, okay? 5 people that you can call. I want you to start this process so you can get and start learning how to raise private capital for your real estate deals. Because the strategy I'm going to talk to you about tonight requires capital. You need some capital. But again, remember, no money down doesn't mean the house costs no money. No money down means it's not coming out of your pocket. So as you learn different ways not to take money out of your pocket, you're going to be that much more viable as a real estate investor. Most of my deals that I do, 95% of my shorter term deals are done through private capital. Okay. I've developed people over the years. Some have gone away. Some have come into the fold. Some have taken some money back. Some have raised some money. Doesn't matter. Those are my go-to people when I need to do a real estate investment deal. Okay. The second method, and I'm throwing this out because I want you to have quick strike, ready available capital. Okay. Now it'd be great if you had $1 million in the bank. You don't have to listen to any of this. You can use that capital for some of your business if you prefer. But if you're looking for some capital and you want it quick and you're getting some good, strong deals through marketing and through targeting, what we're going to teach you how to do and what I'm sharing with you tonight, the second source that I really think you should focus in on is hard money. Now, the reason I say that, and I've never really said that too many times before, I've told you the advantages, the pros and the cons of hard money, but I've never been a huge advocate of it. The reason I am today is because, folks, there is so much money flooding the market. There's so much available capital out there. There's so many people that have gotten in the private money, hard money game, is that the rates have come down significantly. You can, quote unquote, raise or use hard money, and the kind of deals that you're doing, it's not going to kill you. Now, you're not going to use it for long-term rentals, but could you use it to secure a long-term rental and then refinance out? Absolutely. Could you use it to secure a piece of property that you could renovate and sell? Absolutely. And you're also going to be using it for the strategy I'm talking about tonight. So the two ways right now that I would raise private capital, and again, if you have any questions on this you want to throw out, feel free to do it. But the two ways that I would raise capital right now is private money. Okay, learn how to raise private money, and also secure 2 to 3 hard money lenders that are reasonable. Okay, because the biggest difference between private money and hard money is the points and the fees and the headaches you're going to go through initially to get some of that some of that hard money. Okay. So, and by the way, there are 15 to 20 different ways to raise capital. So if you don't like those two, you can learn others. I'm just giving out the two best ways that I know of right now in this market to get you moving forward. As I said, at the end of this, I'm going to invite 4 people to join me for a one-day seminar. We're going to be going over in detail these two best ways to find sources of real estate. We're going to show you how to create lists, how to create data, how to take that data and start marketing, the right letters, the right postcards, how we're going to do a bank of phones to call these folks. We're going to show you different websites and platforms that you can get some of this information done for you. We're also going to show you from the financing plan how to put together a private bank, the documentation you need, some of the laws and regulations you need to follow, how that money is going to flow from beginning to end, an investment package for you that you can present to some of these private capital people before you even have a single deal. I'm also going to introduce you to a couple hard money lenders that I believe are fair and that are reasonable, that won't take your last born child if the deal goes sour. So these are the kind of things we're going to be focusing on that Saturday. I'm going to take 4 folks and we're going to spend all day doing that. Now, number 3 thing we talked about on our agenda tonight is property analysis. Folks, I can't tell you how many people I run into that have no clue how to analyze these properties. Again, let's go back to the initial assumption here. I don't care what you want to do in real estate investment. Again, I don't care if you're looking to buy rental property, buy renovate sale, wholesale real estate, buy a multi-unit building, buy a commercial piece of property, buy a note. Okay, buy a note. I don't care. You need to understand how to analyze a property. Now, I can't go through each individual subset of real estate investment and show you that, but I can give you a back of the napkin way to understand where you need to be if you want to be, quote unquote, a distressed property investor, right? That's what we are. We're looking for opportunity. We're not about going over to Bethesda and paying full price for a house. We need value. We need distress. We need motivation. We need these things in order for us to create instant equity, to create more cash flow, to create equity when we buy our rental properties. We need this to create value when we buy our multi-unit buildings. We need distress, we need value. In order to do that, you need to understand some of the costs. Now, again, I don't have time to go through every single one of those on this presentation, but I will on this Saturday that's coming up. But write this down if you just want a quick and easy way to know where you need to be approximately. And where you need to be approximately on a buy and sell type property is basically in this market, which is good still, 70-75% of the value of the property in good condition. All right. If all the houses in the neighborhood are selling for $100,000, you need to be at 75%, which is $75,000. I'm keeping the math simple. You need to be at $75,000 less renovation. Well, I can hear you through the internet. Well, how do I learn about renovation? Folks, we'll teach you about renovation. You need to learn about renovation. I don't care if you're a wholesaler, a landlord, a multi-unit, you need to have some basic understanding about renovation, okay? You take 75% of the value and you less renovation. That is a back of a napkin way to do it. I'll also throw you out one for a rental property. Now, last month we talked about 1031 tax-free exchanges. I'm in the midst of one. I'm selling a property in Gaithersburg, Maryland. We just put it on the market. We got an offer this weekend that we're negotiating and we're accepting. Full price offer. Actually 30% down, conventional, close at the end of November. So now my 1031 starts ticking. And now I'm out looking in different parts of the country that I've identified that I want to take this money to and reinvest it. And I'm going through the same analysis that I'm going to share with you on this new investment or new couple investments as I buy a few more properties. If you're looking for a long-term rental, residential long-term rental, where you want to be and where I wanted to be when I bought the portfolio, if you've been around for a while, with the investors about 7-8 years ago. Where you want to be is 1% cash flow, 1% rent versus the price of the home. So again, simple math. If you have a $100,000 house, your monthly rent should be about 1%, which is $1,000 a month. Now, try doing that in Washington, D.C. It's very, very difficult. D.C. Metro, very, very hard. If I'm buying a $400,000 townhouse somewhere, I might get $2,200 worth of rent. I should be getting $4,000 worth of rent. Now, believe it or not, there are other parts of the country that you can still accomplish this or get really, really close. I don't want you to worry about all the other costs like taxes, insurance, property management, vacancy, all these other things that we have to take into account. If you can get close to 1% rent relative to the value of the property, you're in good shape. And over long term, you're going to make money. If you're a little bit under it, depending on the market, depending on your strategies, depending on what you're trying to do, you'll be fine too. So those are two very, very simple property analysis ideas on how to get started. Again, back to the basics. That's what we're coming to here. We're giving you two good ways to find houses, be in the senior market, look to estates, two simple ways to, two ways to finance, private bank, hard money, and property analysis. 75% less renovation, or if a long-term rental, 1% of the value of that property. If you take some of those fundamentals and you understand them and you apply them and you wrap your marketing around them and you execute, I promise you, you will have an excellent year in 2022. Okay. Now, by the way, we have complete property analysis. Okay. I have forms I've been using for years. I actually use it as a sales tool. I can share that with you. I'm going to break down every category so it's plug and play for you. So when you come up on a renovation project or a rental, you have a plug and play property analysis. And more importantly, you're going to understand what you're plugging and playing. Okay. We're going to be going through that again on this Saturday. We're going to be going in depth in the two ways. We're going to show you how to market to those, and we're going to provide you those marketing materials. We're going to provide you how you can find the data, how you organize the data, how you surround yourself with a team of people that will do some of this marketing for you. I'm going to show you step by step how to create a private bank. I'm going to show you exactly where you go. I'm going to give you scripts. I'm going to give you an investment package. I'm also going to the property analysis, going to give you simple ways to property analyze something. You're going to understand what you're analyzing. You're going to understand the line items so you can get very good at this so you can be successful in this business. Now, again, questions, feel free. Now on exit strategies, what I told you in the emails or the video, and I know, again, I know all of you sit down and you just, after dinner, you sit down with a brandy or a cigar, whatever you do, and you watch my videos. And boy, it's a great night of, uh, of entertainment for you. So I know I don't have to repeat too much of this, but in the video, I talked to you about exit strategy, and I talked to you about the bottom line for us as investors, obviously, is to create profit, right? It's to create profit. And the way we can create profit is if we match some of our strategy to what the market is telling us. That's why I say you need a think time. You need to think that, hey, what's going on all around me and where's the opportunity? How can I profit from this? Now, when the pandemic hit back in March, early April of 2020, right? I'm sure you were like me. You, for a minute, probably panicked. I did. I think, oh, geez, what's this? This is a new one. Never expected this. Never read this in any seminar book. Never saw this in any late night video I saw. And it was scary. I mean, we were all sent home. I mean, the world shut down. I mean, I tell this story that I drove up to Baltimore one day at 9:30 on a Saturday, and I was the only car on the Beltway coming into Baltimore. I felt like, I missed the second coming. I was like, what happened? There's nobody around. It was scary. But during that time, I had a couple properties I was finishing up, and it surprised me how quickly those properties sold once I put them on the market. And I attributed it, well, she was a teacher. She still has a job. It's a good opportunity to buy a house. But all of you know what happened. I mean, the real estate market in the last 18 months has gone bananas. It's gone berserk. And folks, a long time ago, I got out of the prediction business. I did that in 2008. I have no idea where this real estate market's going to go next. I have ideas, I have guesses, and that's all they are. That's all they are. But what I also know is that I can sit back and I can look and see what's happening because I'm kind of on the front lines, if you will. And I can kind of prepare myself and I can try to get in front of things that I'm seeing happening around me. And clearly the real estate market was doing well. And clearly the flow of properties for a lot of investors was drying up. Homeowners read the headlines. They were putting their houses with realtors. Houses were selling in a weekend, 6, 7 offers. All right. But I also know ways to find good distressed real estate. And I align myself with other investors that know how to find good real estate. And an exit strategy that can maximize profit for you in this kind of environment is what I've kind of implemented. And this is what we've done. Justin, can you show that? Can you show that check? We might have a check here for you. If not, I'll keep going. All right. We might have a check here. Oh, there we go. All right. Can't really see that. Can you? All right. Well, you can see part of it. I think you can see part of it, or maybe you can see all of it. I don't know. Anyways, this check was done last week. You see the number. Kent Avenue is a LLC that I own, acquisition company I own. $111,838. Folks, that is a proceed check. Okay. And the exit strategy used on this is what we've been using on a number of properties in this past year. You see the date, 10/19 last week, 111,000. Now, again, folks, I don't catch $111,000 checks every week. If I was, I wouldn't be on this broadcast probably, to be honest. All right. But it's a good check. I think we'll all agree. All right. So I want to tell you this exit strategy that's been working very well. Number one, you have to have the ability to find houses. Number two, you have to have the ability to finance houses. I don't care. Again, there's ways. You can become a wholesaler, but even as a wholesaler, you need to have the ability to find houses and secure houses. Okay. But in this strategy, and you can take that down, Justin, but in this strategy, basically what you're doing is when you find a house and you buy a house, okay. And again, we're going to show you exactly where to look for these houses and the type of houses that we're looking for, because this does not work in every house. But when you buy a house, something that you might want to think about is what I call a hybrid. All right. And a hybrid just means you're taking a couple different strategies, you're implementing them. I think all of us would agree when you have a property for sale, what you want to do is you want to expose it to the world, right? If you could, you want to put the most massive sign you can everywhere and let the world know, blast it over social media. Hey, I have a property and I'm selling it. All right. So when we acquire a property now, what we're doing is we're going in and we're doing necessary things we think that will present that property to a broad market, right? We might be cleaning out the house. We might be fixing this or that. We might be doing a little curb appeal. we might be spending anywhere from $10,000 to $15,000 on that project. Nothing fancy. We're not replacing windows. We're not repainting the house. We're not putting in new kitchens. We're not putting in new bathrooms. But, if there's certain things, if there's a recent one, there was a couple holes in a roof. Obviously, we repaired the holes in the roof. We did a massive that big check. We did a massive landscaping job because it was literally spent $6,000 to $8,000 on clearing out the property. Can you imagine how many weeds and how many trees and how many items were in front of this house? As soon as we did that, the house looked completely different. It was able to generate a much, much larger deal. And so what I'm talking about, and some of you've heard this, but it's working very well now, is a hybrid. It's called really kind of pseudo wholesaling, buy, renovate wholesaling, if you will. So you're taking a house and you're not going in and doing all the renovation down to the last stud. You're taking a house and you're presenting it to the market, the broad market. You're bumping up your price. So if you're buying it, again, I use simple numbers. If you're buying it for $100,000 and it's worth $200,000, you might go try to sell it for $129,900. Okay. Now, again, you have to understand your costs, and we learn that and understand that analysis. And you set this spread and you let that house go to the general public. Now, there are people out there, because of the market, and will continue to be, that are looking for deals. They might not be an investor. It might be a handyman. Person that bought that house with that check was a handyman homeowner, okay? Someone that wanted to go in and do the work. They wanted to see value. Now, whether they truly ever get value, I'm not sure, but they believe they're getting value. And sometimes you get someone that's looking for value as a landlord. So they're looking to hold the property long-term. So if you can give them a little bit of value, they're rushing to buy these houses. Occasionally you'll get an investor. Maybe they see something you don't see. Maybe they have cash. They don't have holding costs. Maybe they have a crew that's cheaper than your crew. Maybe they do the work themselves. Maybe they only do 1 or 2 deals because they work full-time for the federal government. There's lots of different people that will buy these houses. And my point is, if you implement this strategy and you have the right house and the right area, okay, you can move these houses very, very quickly and cash outsized checks. As I said in the email, have one at the end of the week, probably a $65,000 check. Buying one at the end of the week, probably a $70,000 check. Folks, these are not houses that we're spending 3 to 4 months renovating. These are 1 to 2 weeks, quickly clean up and put it back on the marketplace. All right. Now, you might be sitting out there and go, well, John, why don't you just wholesale the deal? Well, great question. And you could do that if you want. My point is, and from what I've seen, even professional wholesalers, and folks, I know some guys, I've trained some people that are cashing ridiculous checks wholesaling real estate, okay? Outsized checks. But my point always been, if you spend a little bit of money, you have a little bit of cost, no doubt, but if you broaden it out a little bit and you broaden it out to the bigger market, okay, that your chances of having larger checks will come to play. For example, I did a house in Hyattsville. Wholesaler sold it to me, okay? I had a partner, me and my partner on this deal. And they sold it to us, and we looked at it and we said, okay, we can go in and we can do this project. And I think he made like about $20,000. I told him, I had a conversation with him. Listen, why don't you partner up with me? Why don't we settle on this house, do a little bit of clean out, do some work. We can put it to the broad market, and you could probably make $40,000. You could do 2 wholesale deals with 1 deal. No. I just wholesale, and that's what I do, and that's fine. Folks, it's short-sighted in my opinion. I believe you have to be a little bit nimble and you take where the profits lead you. Now, I do understand a business is set up as a certain way, and that's what they do, and they don't want to deviate at all. I understand that someone that does tile work doesn't necessarily want to paint because it can make a little bit of money. But when you're in the real estate investment game and there's opportunities to partner, there's opportunities to mesh different strategies to make more money on the same asset, to me, that makes a lot of sense. And so that's what I've been doing. Now, if it doesn't work, if you throw it out to the broad public and no one bites, no one buys it, say, it needs too much work. Oh, it's not worth what you think it's worth. Oh, it needs things that I can't do. That's fine. At some point, and it's not long, maybe a week or 2, a couple of weeks, if no one bites, take it off the market and you do the initial strategy. Maybe it's to renovate and sell at market price. Maybe it's to renovate and hold as a long-term rental. Whatever the strategy is, you keep continuing doing it. So it's a great hybrid strategy in order to take advantage of the market that we're in. And I believe we'll go through 2022, even if the market slows down, which it is, which I believe it is. I think it's slowing down dramatically from where it was. It's still very good, in my opinion, but it's slowing down. We're not getting 15 offers. We're not getting 16 cars waiting to get into the house like we were in May and June. It's slowing down. Some of it's seasonal. Some of it's just buyers are exhausted. Some of it is the prices have gone up a little bit high, so forth and so on, a little bit more on the market. But I believe if you implement some of these strategies, the strategy of hybrid, of selling something of value that gives someone a great value, you will do very well in the upcoming year. Brenda and I, my wife, we bought our first house in Silver Spring, Maryland. She was 23. I was 26 or so, 25. We were newly married, and we wanted to buy a house. We saw a house. You've seen it, 1950s brick colonial right there in Silver Spring. 3 bedrooms, 2 baths, 3 floors, a little bit of a yard. And houses in that neighborhood were going for $150,000 at that time. Okay. And I negotiated. I thought, oh, I was a great negotiator. I had a painting contracting company. I knew how to negotiate. I negotiated a $133,000 sale in that house. And when they took it, I thought, man, we stole this house. We got such a great deal. Now, this is way before I ever got involved in real estate investment. But I still prided myself on being a decent negotiator. And I thought, wow, we got a really good deal. Well, it turns out we didn't get that great a deal, because by the time we went into that house and we painted it, and we had to put a new kitchen in, and we had to put new windows in, and we had to finish the basement, and we had to refinish the floors, and we put new lights up, and we got new landscaping and a new fence. Folks, we overpaid for that house. But the idea that we got value and it allowed us to get in still resonates with me today. And so I'm circling back. I'm thinking more, and I'm thinking, why am I spending on every house all this time and energy and effort to renovate when, in some cases, a lot of cases right now, we can take these houses, we can do a little bit of work, and we can move them on to really, really large outsized profits. Done very well this year with this strategy. It will continue. Now, if you want to be a part of this, and if you have questions, fire them away. I don't want to keep you too long. We have done studies, and I know after 40 minutes, 45 minutes of sitting here listening to me, you are ready to go watch Squid Game or watch Monday Night Football or spend more time with your family. So I'm going to get to the point. We have this one-day seminar. I'm going to limit it to 4 people, okay? I'm going to spend time with these 4 people. November 13th at our offices in Rockville, okay? And Justin, you can scroll down. I can let them know how much it is. It is $995. Okay, $995. If you have a partner or spouse, they can come for $495. This is what we're going to focus on. We're going to take what we talked about tonight, but we're going to drill it down. We're going to get into the weeds. So you will walk out of there knowing, hey, I know where I can find these houses. I have now data. Okay, we're going to create data right there for you, data that I can now market to. We're going to show you how to market it. We're going to show you how to build a team, a virtual team, if you will, to help you pound these properties, pound these owners in order to find deals. We're then going to talk about, again, expand on the ways to finance real estate. I'm going to set you up with a private bank. I'm going to show you exactly step by step what you need to do in order to create this so you can have this capital in order to do these deals. And again, if you decide to go a different direction with your deals, that's fine. All this is still going to work. We're going to go further into explanation about this exit strategy. Things that I have found are the best things to do on these houses in order to maximize that profit. Folks, how many deals do you need to do at $50,000, $60,000, $70,000 per pop? How many of these things do you need to do? Not that many. Tuition is $995. Partner and spouse is $495. We're going to take 4 people. It's going to be all day. If you scroll down a little bit, Justin, this is how they can let me know. I guess I don't even have that on there. How bad is that for me? There's 2 ways. You can either email us at profitableproperty@gmail.com and just let me know. There we go. Okay. The text is wrong. So I screwed this up. It's my fault. You can text me at 301 or call 943-5535. 301-943-5535, or you can email me at profitableproperty@gmail and just say you want to take part in this class. After we get 4 people, we're going to cut it off and we're going to have a good time all day of really going through this. This is going to get you prepared for 2022. Okay. Now, again, I know a lot of folks on this have been around on WREIA things. I know you guys have been around a while. I know there's people saying, well, I know all this. Well, do you? Have you really gone back? How big is that private bank of yours? How big is your data points that you're really marketing to these folks that are really now one of the greatest sources for us to find distressed real estate? So again, if you need a refresher course, if you're new, if you need to learn how all of this works, sign up. I'd be love to work with you. Now, Justin threw out that profitable property guarantee. I made this for 20 years. Folks, after you do a class with me on any level, if we do any kind of deal together in the future, I don't care if it's a referral for a listing or it's a bird dog deal, a partnership, a wholesale deal, whatever it is, you not only do that deal, obviously, but you'll also get a full refund of your tuition. So you'll also get that $995 back. So basically, if you're doing anything in real estate investment, this course is free. It's absolutely free. I can't tell you how many refunds I've given over the years for people that have taken my classes. This is stuff that's working right here in Washington, D.C. right now. And if you come join me, you're going to learn all about this and we're going to get you up and running. This is not theory. This is actual stuff that we're doing. Again, I hope this was helpful. Again, this is very hard sometimes for me to deliver because I don't have any feedback. I don't see faces. I don't see people sleeping. I don't see people yawning. So I'm not sure if any of this resonated. I hope it did. I hope you got a little bit out of this and you have an understanding of where your focus should be. So again, if you're focusing on notes, if you're focusing on wholesale deals, if you want to do a buy, renovate, and sell, if you want to do a long-term hold, if you want to buy multi-unit buildings, my advice to you is focus on the senior market. That's where the deals are coming from. That's where the deals are. And I think that's going to be the case for the time being going forward. As the economy opens up, as we have more foreclosures, as we have more auctions, as the banks take more properties, as people, start getting back into swing of things, there's going to be more opportunities, obviously. But right now, this is where the action is. So I hope you enjoyed this. Text me 301-943-5535. If you want to take part in the class, you can email me. We'll be back in November. We got another meeting for you. I got a great idea for the meeting in November. I think you'll really enjoy it. 301-943-5535. If you have questions, just let me know how I can help you out. All right, a little question here. Are you putting on the market through discount broker or putting out in the broad market yourself? Great question. Now, Belinda, I am a real estate agent, okay? So I have the ability to put my properties on the market and pay less commission. By the way, I'm offering the selling broker a lot less commission. In some cases, 1%, some cases, 2%. These are easy deals for them. Okay? So there's a whole process and strategy that I'm going to share with you at the seminar. Now, if you're not a real estate agent, I would advise you to either hook up with someone, that's more creative. Like I've done lots of listings for very little or no money, or like you said, a discount broker. You want it, or you can market it yourself. But I prefer you to get it into the Bright, into the MLS, into the Matrix. Folks, this goes far and wide. And then all the social media sites are populated. So it really gives great exposure. And you're going to know if you hit a vein, if you hit the right target and right value proposition, because your phone, text, email, social media will start lighting up. So you will know. And if it doesn't work, hey, you can always turn around and do strategy 2. Alan, are evictions now processing through the court system? Yes, they are. They are starting to process through. You're going to see a lot more evictions. We've already seen rents go very much higher. Okay, $1,800 3-level townhouses are now trading for $2,200, $2,300 and more in certain neighborhoods. So you're already starting to see this. Landlords are going to become much more picky. They're allowed to be because they're going to have more applicants. We're seeing a rent boost for the first time in quite a while. So yes, good question. Any other questions as we thing up? Okay. Going once, going twice. We've been with you here for about 50 minutes, folks. I enjoyed it. I hope this gave you a little bit of insight to stuff we're doing and stuff you can do too. This is what's going on in our market. So I appreciate you tuning in and listening. Again, a lot of you have my email and my cell phone, so feel free to reach out. We're actively doing deals. Oh, just a little side note. The next 2 months, by the way, are some of the best months to acquire property. November, December have always been tremendous months to acquire property. Get ready for the winter months. If any of you watch TV, the winter is coming. Well, it's coming. And it's a great time to acquire properties to get ready for the winter. Whether you're doing the hybrid system, whether you're renovating, whether you're doing some rentals, great time of year to really be out there and marketing. And that's, again, why I'm doing this course in early November to get you up and going and ready for 2022. Folks, thanks a lot. Talk to you soon. Take care. Be safe. All those good things. We'll see you next month and hope to talk to you, many of you, before then, obviously. Take care.